welcome to Bite Size Dental Marketing. Today I have Taylor Hill. Taylor's a CPA and CFP at Cerity Partners, and what a wonderful time to have you on the show. We can talk about planning in the midst of the 2025 tariffs and hear about
Yeah. Yep.
Taylor. When you jumped on, I was sitting there debating, are we going to talk about tariffs? Because I can't imagine tariffs are too impactful to dentists. And then on the pre-show, we were talking about how the investments and what you're doing. But before we jump into anything in depth and political or crazy, Taylor, I'd love to hear more about you, Cerity Partners. How you came to be. I know at some
Absolutely.
point you were EY, and I
Mhm.
mean, you've had a great career there. Talk to me more
Yeah.
about it.
Yeah. Well, I appreciate you for having me, Eric, first of all. It's definitely an honor and a pleasure to be on the podcast with you. Yeah. So I'm Taylor Hill. I'm with Cerity Partners. We are a national financial planning firm, investment management firm all across the country. As you mentioned, I came out of college, went to Oklahoma State. I'm from a small town in Wichita Falls, Texas, 2 hours northwest of here, and graduated from Oklahoma State. And I had no idea what I was going to do when I went to school, and about even 2 years into school, to be honest. But when I was 19, I read a book by Dave Ramsey called The Complete Guide to Money, and it really impacted me in how I thought about money in general and how it impacts all of us. We can't really get away from it, to be honest. And what shocked me about it is how little I knew and how little I knew from not only from my parents, but from the school system and, public high school. And so it really fascinated me. And so because of that, I eventually majored in finance at Oklahoma State and then eventually switched over to accounting. I went to Ernst & Young, just like you mentioned, worked at EY Dallas as an auditor and got my CPA. I quickly realized that not everyone loves auditors. And
Sure.
when you walk into the
They're
room,
a party. Mm-hmm.
Exactly. They're not exactly fired up to see you walking in. And so, within a couple of years, I realized I really didn't want to stay in that industry, in that space. But I did want to switch over to financial planning. And so I found myself in financial planning for dentists. And so that's the space that I am working.
How'd you hook up with just dentists?
Yeah.
That's an odd group of people.
To be, yeah, to be honest, it kind of came out of the blue to an extent.
Mm-hmm.
I mean, I knew I wanted to be a financial planner and help people manage money and, do tax planning and all the things. But to be quite honest, not every accountant can easily transition to the financial planning space.
Mm-hmm.
And so the first group I got connected with just happened to be in that industry, in that space. And I said, sure, why not? And so now I know way more about dentistry than I ever thought I would. And I've really enjoyed it. But, at the end of the day, it is a niche space. But what you're really helping is small business owners.
Mm-hmm.
And, that's really what I enjoy doing. I love working with small business owners and helping them grow their practice and plan their finances and tax planning and investment management. And that's how I got connected. I wish I could say that I had like an uncle or whatever that was a dentist, but it just happened to be, right place at the right time, and a recruiter hit me up.
There's dentistry. Vets have been bought up in record number by private equity in the last few years, right? I've heard dentistry, chiropractics are kind of the last bastion of small businesses out there in the medical.
Yeah.
Plumbers are being bought up like crazy.
They are.
So they're not even most Fred's plumber down the street. He's probably working for some.
They're still around. They're still around
Yeah.
because I do have family in that industry. But yes, you're right. They are getting bought up. Everything with private equity. I agree.
Air conditioning, HVAC is crazy and bought up there. Mm-hmm. What other like small businesses are out there that you know of? Is dentistry the last of? Are we a dying breed in these non-private equity backed industries?
I think that I don't know that I would say that. I mean, there are plenty of small niche companies that are run by just a few people. One stat that has fascinated me when I joined with Cerity, and we'll get into that here in a minute, but in joining Cerity Partners is the stat that 87% of businesses that have over $100 million of top line revenue are privately owned businesses. Okay. And so
Yeah,
when you think about that, now you're right. A lot of that has been swallowed up by big PE groups like KKR and all of those,
which would
Apollo,
be considered private, right?
which would
I
be
mean,
considered private. You're right. But I mean, there are still plenty of not just family owned businesses, but partnerships that have not been swallowed up by the likes of KKR and Apollo and all those giant guys, BlackRock and those guys. Um, I still think there's plenty of opportunity for
okay.
small business owners. But yeah, dentistry is kind of one of the major fields that is still hanging in there. And I think it's just because it's such an intimate, people have really intimate relationships with their dentist. I mean, they want to go to the same person over and over and they get really close with them. Um, and I think that's why there's always going to be opportunity for small private uh, dentists to run their own practice.
Yeah, and we've seen it in the past couple of years now. Some of it's because capital is so expensive, but
Yeah.
I don't know that there's any of the big DSOs that have recapped recently.
Yeah. It's definitely slowed down. No question.
And I'm not seeing I'm seeing prices still be high on practices, but there for a while we were losing an account to DSO
Yeah.
because of course, I mean, just bang, 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 bang. And now we've lost an account to DSO in the last
Yeah.
16 months, maybe.
Well,
It's been a minute.
yeah, interest rates have had a part in that.
Mm-hmm.
And also, I mean, let's be honest, they were moving quick, like rapidly acquiring dentists and small practices. And so inevitably that's going to slow down. There's going to be ebbs and flows, with private equity. But yeah, you're right. It's definitely slowed down in the last couple of years. No question about that.
So today, we're just entered Q2 of 2025.
Mm-hmm.
What are you talking to your clients about?
Yeah. Well, and we were talking about this pre-show, but the buzzword right now is tariff. I mean, that's the word of the year.
Somebody's favorite word.
Yeah, tariff. And I can guarantee you 80% of the population didn't even know what a tariff was until the last couple of weeks or maybe the last quarter.
Huh.
But right now, I mean, to be honest, our meetings really haven't changed. I mean, what we do with our clients at Cerity Partners is, they'll come in. Usually they'll meet me here in Arlington, Texas, or I'll fly to them wherever they are in the country. And we will start with an update. What are the goals for the day? And we'll spend most of our time on the practice. Hey, what's working? What's not? I noticed that this piece of overhead is a little bit higher than last year. Why is that? And that really hasn't changed. Just because tariffs have become a bigger player in the investment world, investment landscape, it hasn't changed how we go about our business. And I don't expect that to change. Now, whenever we talk specifically about investment allocation and you've noticed that the S&P 500 has come down 10, 15% in the last couple of weeks. Of course, we're going to talk about rebalancing their investment portfolios, their accounts, and we'll talk about what's going on and what we can reasonably anticipate in the coming months. But it doesn't change how we go about our business with our clients and with our dentists. So it's definitely, and again, that we're only in the first couple of innings of this.
That's right. It's going to be a long game.
Yeah, it's going to be a long game. We think it's going to be a long game, but who knows? But it really hasn't changed how we go about our relationships with clients in our meetings so far. Just making them more aware of, hey, what is a tariff? What is going on? Why is this a thing? And helping them plan for working around that and working through it. So,
now, is it correct to say that outside of the investments, the personal investments, right? Your supplies, maybe some equipment at some point, but any equipment here is probably already on the U.S. right? Like, what would be the next 60 days impact to a dentist office outside of the investment side?
Well, number one, I would say that tariffs implemented for the long term at this rate that Trump just enacted, if they are left in place for a long period of time, everything as a consumer, everything that you purchase will eventually get touched, and and that includes dentists. Dentists will not be immune to that at all. All supplies, and I shouldn't say all, but the vast majority of
come out of China or somewhere like that.
When you go to the grocery store, that's correct. When you go to the grocery store, when you go buy clothes, food and clothing, everything will be impacted if they are left in place for a long period of time. However, if this becomes a 1 month, 2 month negotiation tactic by the current administration, I don't suspect it's going to have a material impact for the long term.
Mm-hmm.
So for now, nothing that's going on right now should impact how our clients are behaving or how they're buying
Mm-hmm.
supplies, how they're purchasing products. This is not just because tariffs are in place and we expect prices to rise over time. If they're left in place, doesn't mean you should just go out and buy all kinds of equipment and do all of that. But long term, I mean, if they are left, in place, then you can expect all supplies to creep up, no question.
Yeah.
Yeah.
What else are you seeing in the industry today that, dentists might be struggling with? We have rising labor costs. We have,
Mhm.
increased competition. What is it that is mid 2025 we're seeing as the big challenges they're facing?
Well, I think over the last few years, I mean, inflation has been a problem, and it's impacted staffing, and that's whether you're a general dentist, orthodontist, pediatric dentist. I mean, it's impacted all the different sectors of the dental space, all the different specialties, and I would say that that's, at least with what's going on right now, that's still a primary focus of our clients is inflation. Hey, are we keeping up with inflation with our current fees? And it's a really tough balance, because if patients are experiencing this at home and you're experiencing this in the practice, it's a delicate thing to keep up with your current costs and keeping your current profitability. And so I would say that's a primary concern right now, not just right now, but over the last few years, gauging what is actual inflation and are we keeping up with costs. And that's been a very tough thing to work around, to be honest. Because no one wants to feel like they're squeezing their patients. No one wants to feel that way at all. And I see a lot of my clients that are very hesitant to raise their fees because of it. And so that's been a primary focus. The other thing too is, yes, there is increased competition with the DSOs. And, another big thing has been, hey, do I want to sell to a DSO? That's still a thing, even though that has slowed down, that's still a primary factor in all of our clients' long-term plans.
Now, are you working with them to negotiate fee schedules? Are you advising them they should fees like
Yeah.
yeah.
We look at that every single year they come into our meetings. And so we have a fee comparison report uh, through the NDAS, and we will run that based on their zip code. Now, this is not the end all be all. It's not the Bible. Just because that report tells them they're only in the 50th percentile, well, there's some nuance there. Like, just because you're in the Houston, Texas zip code or Dallas, Texas zip code, I mean, you could be on a different side of town. Like, there's a lot of factors that come into play. What type of dentistry are you doing? Um, but yeah, every year they come in. I mean, at a minimum, we recommend clients raise their fees at least 3% to keep up with inflation, at least.
Mm-hmm,
Um,
mm-hmm.
and then outside of that, there's nuance in determining, what percentile are they in their community? Is it time to raise fees a little bit more dramatically? Do they need to stay put? It's a very nuanced conversation for sure.
Yeah.
Yeah.
Now, is there a strategy that you like as far as keeping your hygiene fees lower, but your cosmetic fees a little on the higher
Yeah.
side, or do you like to raise everything? Is there a strategy to it, or is just let's just raise fees?
Well, I would say there's absolutely a strategy, and it really depends on the client, Eric. It depends on what they're trying to do, what niche are they in their
Mm.
community. Um, but I would say that, for your crown fee, right? If someone comes in and they need a crown, whether it's $2,000, $4,000, it's going to be a lot of money to them. And so for those, what I would usually tell clients is they can be more willing to raise those a lot faster than their pro fees, right? Because those are the routine fees that everyone sees every time they come in for their 6 month cleaning, right?
Well, more importantly, it's the fee that everyone thinks they're going to pay.
Exactly.
Whether I need a deep cleaning or not,
Yeah.
how much is a cleaning?
Yeah. And so when we look at that, that's usually a huge part of our strategy. Now, again, every client's different. Every community is different. And it's a very nuanced conversation, but that's definitely one thing that we typically approach fees. I mean, if you're in the 20th percentile in your area, we're going to be more willing to raise those bigger fees,
Right.
those bigger codes than the pro fee or oral exam. So yeah.
And so you're looking at the fee structures, you're looking at the overall P&L of the practice. How are you balancing that then? Because I assume you're getting into some version of tax strategies and things. How are you bridging that office P&L and office expenses and, I got a car and I'm paying my kids or whatever into their personal tax strategies? How are you sort of drawing the line in those meetings?
Every planner is different, but how I approach our meetings is if you were to look at a P&L and go from top to bottom, at the very top is going to be revenues, right? Are revenues growing? Are they declining? Are they staying stagnant? That's the first thing we're going to look at. Why are they, if they are stagnant or they're declining, why is that?
Mm-hmm.
Did you scale back on your days? Is the population in somewhat of a decline? If you're in a smaller community, people are moving out. I mean, there could be all kinds of reasons for why top line's decreasing. But that's where I start. And so we start with collections, which is a function of production, and fees and insurance. Are they in network? Are they out of network? And then I go down the line. And so we start with the top line and revenues, like I said. And then next we go to our direct costs. What are direct costs? A great example is staff, right? If you're going to produce, 2 million in production, well, you're going to need more staff than if you're producing 1 million of production. Another great example of direct costs would be dental supplies and lab bill. The more you produce, the higher in terms of dollars that line item is going to be on your profit and loss statement. Credit card processing fees is another example of direct costs. It's directly correlated to the top line. It's directly correlated to how much you produce and collect. And then from once we get past the direct costs, we'll talk about fixed costs. What's a great example of fixed charges? That would be, one of the best examples is rent. Whether you produce $100,000 or $200,000, the rent is the rent is the rent, unless you own your building. Then you can kind of manipulate that a little bit. What's another example of fixed costs? Advertising, right? When they come and meet with you guys and they sign a contract or a deal, no matter what they produce or collect that month, typically, their advertising budget is what it is. And so that's how I go down. That's how I organize our meetings is we start with the top line and go all the way down until we get to their net profitability, or otherwise known as their quote unquote EBITDA, profit margin.
And how are you deciding what to push through the office and what to leave personally? And I know that's different for every person, but just sort of broad strokes, right?
Well, that depends on the client and how aggressive they want to be. What exactly? What's interesting?
Everybody wants to be very aggressive until they see how much work it actually takes.
Or they meet an IRS agent, and then all of a sudden they don't be nearly as aggressive.
Yeah, the Augusta rule sounds great on paper until you really realize what is required to implement it on a practical level, and then you're like, oh, that doesn't sound fun anymore.
Yeah, but you know what? I have clients who are willing to do it, and they're willing to document, and they get away with it. And so it is totally dependent on the client. You're 100% correct. Now, but how do we determine? Well, one thing that we do in our meetings is whenever I meet with my clients every year, they will give us a lifestyle spreadsheet, and they'll walk. So because we want to know what are they spending just to project out cash flow. I don't really care so much about what the dollar amount they're spending, as long as it works in their plan. As long as they can meet their goals, they could spend $5K a month. They can spend $25K a month. I genuinely don't care what they spend as long as they can reach their retirement goals or their annual cash flow goals. As long as they're covering that doesn't really matter to me. But one thing we'll do is we'll use that lifestyle spreadsheet that they fill out, and we'll say, okay, just as an example, cell phone bill, can this be justified as a practice expense? And we'll talk through it. Dining out, if their spouse is on payroll, hey, can this be justified as a business expense whenever you go out with your spouse and you eat? Are you talking about the business, right? Can we justify this? Those are just two examples, but we'll go through the list and we'll say, okay, what could be classified as a quote unquote business perk and what should be left in personal expenses. And typically I'll recommend clients be pretty aggressive with that, because the worst thing that happens is their CPA looks at their books at year end and they say, hey, that's not actually a business deduction, and they code it they reclassify it to a distribution. And so I'll typically recommend them be pretty aggressive. If they think it's a business expense, then I would recommend them write it off 100%.
And the beauty, I mean, we have the same, Andre and I have the same thing. Like, we like someone who does other businesses like ours because they have
Yeah.
an eye for like, oh, look, your Porsche 911 is in fact not, I can't defend this. No,
Yeah.
your truck, sure.
Yeah.
Yeah. And I think that's, to me, where we were talking on the pre-show about how dentists and businesses and private equity. I know that you can get your taxes done cheaper somewhere else. I know that there's,
Yeah.
I'm sure cheaper places, but the fact that you get to see other dentists and what they're coded, like, that just has to have so much confidence. And hey, look, this is an outlier,
Yeah.
this,
Yeah.
and to me, that's always brought me confidence when I do talk about my tax assistant agency owner. And, I'm obviously not dentist, but what do I see other agencies doing in travel?
Right.
How are they paying their kids? How are they doing their vehicles? And how are they doing client visits?
100%.
All of those. Why is it I always visit my clients in Hawaii? I don't
Yeah.
know. Yeah.
Yeah.
Just the way it works out.
Yeah. I
They're
think
needy.
that's why. Yeah. Yeah. It's one of the biggest things when we first meet a client and they come in for their first meeting. That's always a huge topic, is we look at what they're running through their practice, and it's just not nearly enough. And that's not because we're trying to cheat the tax code. That's not our goal ever. Our goal is to just make sure that anything that can be justified as a business expense should be written off through the corporation, through the business. And so that's one thing that we help clients with, and we usually spend a good amount of time on it, especially for our first meeting. Now, by the third or fourth meeting, they usually have that down for the most part, and we don't have to spend the same amount of, we don't have to go through their lifestyle in detail. So
yeah, Taylor, you should talk to Andre. Andre has a printout of all the things that he should be expensing regularly, and he's got it like by his monitor. So every time he buys something, he's like, "Can I do that?" No.
Yeah, exactly.
Yeah.
I love that. Yeah.
Now, let me ask you, sort of a summary question here.
Okay.
So, what are the 3 things or X number of things that you find dentists are you just wish they knew? When they come and talk to me, I wish they had a better understanding of how X works. I wish they had a different set of questions. Someone come and talk to you. What's the dream first meeting you're having, Taylor?
Well, I think 3 things that I wish more dentists knew, and you just hit on one of them. They're not writing off enough deductions. That is one of the things I would tell you. Another thing is managing staff and connecting with their staff members. I feel like a lot of dentists I think when they first start their practice and they've hired those first couple of employees, they meet their front desk person, they meet their first hygienist, they meet their first assistant. They're very close with that group because they're the first employees, just like any business owner would be. But then over time, I think they lose that connection. They lose that camaraderie with their staff. And so, bringing that up during our meetings and how they manage people and how they connect with people. I think a lot of it, and this isn't just specific to dentists, I think a lot of business owners, they kind of miss that. And so when you meet with a third party that's advising you on your business, your practice, I think, bringing that up is very important. And you'd be shocked at whenever you have a staff member or staff that feels like they matter, feels like what they do is important, and that they're actually being, watched and appreciated. That's when you notice that production and efficiency, comes up. So that's one thing that's big that a lot of people don't talk about. The second thing you hit on, writing off expenses and not paying more to the IRS. I mean, no one likes the IRS. I haven't met one person yet. I keep looking for them, but I haven't met one single, and that's not just business owners either. Let me know if you find that person. But then number 3 is I feel like they aren't as aware of how to save for retirement. A lot of business owners in general and a lot of dentists are not aware of how powerful a 401k plan can be. They're not aware of, if they're a little bit older and they've been practicing for a while, what a cash balance plan is and how that can keep a lot of money away from the federal government and save them a lot of cash. That's another thing. And so, number one, managing people. Number two, keeping the government away from their money, write-offs. And then number three, saving for retirement. One thing we spend a lot of time on in our first meetings is the three buckets: the taxable bucket, the tax deferred bucket, and the tax free bucket. So, an example of a taxable bucket would be a brokerage account or a bank account, right? If you earn interest or capital gains in that bucket, you pay taxes on it. An example of a tax deferred account in the second bucket would be a 401k plan or a cash balance plan. When you defer money into that type of plan, you are keeping it away from the government. And so you are deferring taxes. That's why it's called the tax deferred bucket. And then the third type is a tax free bucket. So the best example of that is a Roth IRA or even a Roth 401k. Whenever you contribute to that, you aren't deferring it in the year you contribute from taxes. However, just like a 401k plan, it grows tax-free. So all the interest, dividends, capital gains within that bucket are kept away from the government. And so we talk about how important all three of those are at retirement and how they all are interconnected and how we can use all of them as tools to efficiently pull your assets out and use during your retirement phase. So, yeah.
Now, I'm going to test my financial acumen, Taylor.
Okay. I'm ready.
Is it a true statement that an HSA maxed out, not used, is one of the best investments you can make in 2025?
It absolutely is. You're correct.
Look at me go.
Proud, yes. And I saw you light up right there. You were proud. I love that.
I was proud. I knew it was going to be yes.
It's the only type of account where when you contribute to it, and by the way, to be eligible, it has to be a high deductible healthcare plan. If your healthcare plan is not a high deductible plan, you are not allowed to contribute to an HSA. But it's the only type of account to where whenever you contribute to it, it is deferred from taxes, just like a 401k. It grows tax-free, just like a 401k and a Roth IRA. And then when it's pulled out, as long as it is for healthcare costs, it is pulled out tax-free. It is the only triple tax advantage type of account that we have like that. And so you're right. It's a great account, and it's a great tool to use in saving for retirement. Now, one thing that's important about that is you have to document your expenses, and you can do that for a long period of time. Scan your receipts in, save them into a folder, and then down the road, you can pull those expenses out tax-free. And so that's one important thing to note is you have to keep track of your healthcare expenses.
Well, man, Taylor, thank you so much for jumping on the show. I'll link Cerity Partners and your bio out there in the show notes, and certainly give Taylor a call. I mean, it's been from tariffs to taxes. Taylor does it all.
Yeah. I don't tariff. I promise I don't. Do not accuse me of that. But I will help you work around tariffs.
Around tariffs.
Yeah.
No, I mean, we can work out a jingle like Taylor does tariffs and taxes. I mean, like we can work something. We can workshop some ideas, Taylor.
You know what? I would love to have a happy hour where we come up with that. That would be fascinating.
Yeah, a little jingle goes along. Taylor, tariffs and taxes. And
yeah. Well, Eric, I appreciate you for inviting me.
Yeah, of course.
And it was a pleasure. And I always love connecting with you and your team. You guys do a great job and have helped many of my clients. And so I really appreciate that.
Thank you again.
Absolutely. You bet. Anytime. Appreciate it, Eric.